Hello and welcome to this week's Closing Bell. It has been a massive week in the markets. Huge sell down, which is exactly as forecast by the Sultan of Swing right next to me, Murray Dawes. So Murray is going to take us through all the key markets that he's watching to see how this panic plays out. Talk a little bit from me as well about some ideas. But Murray, you're the man of the hour because you've been warning about this. You flagged it ages ago. We saw a taste of it. We thought we'd get a little bit of a bounce, but Trump just come in and just
kneecapped everyone.
Yeah.
Yes, pretty much. So I think the move after Trump is probably the first major technical break in this down move because, markets constantly have little pullbacks and corrections. So, I was starting to see the signs of something and thought, look, this could be bigger. The weekly trend turned down. I was sort of thinking, okay, this could actually be something serious. And now we've actually broken through levels where it's like, yes, this is going to be a bit more than most people expected, and there could actually still be quite a bit more downside to come. But in the weekly charts, it's probably getting quite oversold. So as these markets move, they never move in a straight line, and I think it's foolish to think you can know exactly what it's going to do from this moment forward. The way I see these things is that you get gets way oversold, everyone has a panic, and then you get a bounce back, the big short squeeze, and that can often go further than you think, and then another wave of selling. So for me at the moment, I'm fully on the back foot, and I haven't been trading much for the last few months, buying a few defensive things. But well, let's get into the charts. But to start with, I'm saying, the US yen is really cracking. I think that can fall a bit further. We're seeing the Mag 7 stocks getting belted.
Absolutely.
We're seeing US bonds rallying. So what we're probably seeing is a carry trade unwind that I've been talking about.
So you still think
starting
it's
to happen.
the carry trade?
Well, I think it's just starting to get going, yeah. There
Okay,
can be a hell of a lot more to come.
Of that.
Yeah, so we'll just have a quick look at the US yen. So this is looking at that US yen on a monthly basis.
Because I'm assuming this is almost totally unrelated to the tariffs, or not? Is Japan is he going after Japan, Trumpy? Or
yeah, he is.
He is.
He is. But it's just when the markets break and people are unwinding trades and getting out, it then forces their hand with the US dollar getting hammered and Mag 7 stocks also getting belted. Like their positions are going the wrong way very, very rapidly. So in the end, it's like just everyone trying to get out the door at the same time when all of their positions, because they're long US dollar and long Mag 7 stocks. Now you've got the US dollar going down and Mag 7 stocks going down. Their positions rapidly turning from being fantastic to being terrible. So then all of a sudden they all hit the sell button at the same time, and that can just accentuate the moves quickly like we saw in August last year. So that's where I just want to show you quickly. And this is a monthly chart, so the US dollar, has been really strong against the yen, or the yen's been very, very weak because they've kept rates near zero. We know that inflation in Japan's been picking up. We know the the Japanese 10-year bonds going from nearly 0 to 1.5%, which is a really big sell-off in the Japanese bonds. So the yield's going up on the 10 years, and now in US the yield's going down. So we're seeing the currencies are going to move as a result of that. So last August, we saw the US yen got absolutely hammered, right, down to 140. And that was when we saw stocks really get belted. The NASDAQ got belted nearly 10%. And now we've seen this turn up in a big rally. But here we are again with that US dollar yen. This is when I was warning people a few months ago. We got the sell pivot there. And now it's starting to break down further. And there's not much support till this midpoint of the range. So this is the range I'm looking at here. I know it can be confusing for people. I just want to be very clear. The calculations I'm making are that we've had this rally and then this correction, and that's the correction that I'm making the calculations off. So there's the midpoint. So I'd expect to see that US yen possibly heading back to that midpoint. And look, if things get really out of control, it could even go further. But for the moment, that US yen is really starting to move, and that's what's giving you the hint that a lot of this selling is probably on the back of that. You see the US dollar as well. I was saying, that the US dollar was a sell up at around sort of 106, 108, and now that is really turning down. So we had the monthly sell pivot in the US dollar last month, and now you can see really starting to crack to the downside there. So that US dollar coming under serious pressure. So that's what's sort of forcing those unwinds
I wouldn't
to happen.
to be a currency expert at all, but I did read recently that Trump's sort of playing with fire a little bit because a lot of those trade surpluses that the other countries do, they reinvest in treasuries. He's going to try and take away their trade. He's taking a buyer out of the treasury market. So long term, interesting how that all plays out.
Yeah. Well, I mean, at the moment, the US bonds really is a big buy for me. So just as we've got the US dollar selling off, so this is where I was showing people the US bonds. This is the US 10-year bond yield chart. So just to recap for people, when the yield is going higher, so when this chart is going up, that's actually the price of the bonds going down. And so when the yield is going down like it is now, that's actually bonds rallying, the price of the bonds going up.
And would it be fair to say the bond market is now pricing in lower growth and less
inflation? Yeah, well, exactly. And it's the flight to safety. You sell out of the Mag 7 stocks, you buy bonds. And the bond yield is pretty high, right? So we've had, the bond yield went up leading into Trump getting in, went up to, nearly 4.8% again. So on 10-year bonds, you're getting about 4.5%. Not a terrible yield when you're thinking growth is about to slow and you're dumping stocks. So people are switching out of stocks and buying those bonds, which is not a bad buy.
Correct me if I'm wrong, but wasn't this time last year we were all worried that the bond would go to 5%?
Yeah.
That was going completely the other way.
Exactly, going completely the other way. And this is what I've sort of been saying on this. There's the bond, the last wave higher in the US bonds. And I was sort of pointing out to people, here's your buy zone of the yield, and here's your sell zone of the yield. And you can see just recently, this is when Trump got in, you saw yields flying higher to 4.8%. Look at that reversal there. There's your sell pivot in yield, which is actually a buy pivot in the bonds. So that's saying the bonds are actually a buy. So that's when I've been telling people, look, watch out. And now you can see that the bond yield is cracking through the midpoint of that range. So that's now giving targets down to that buy zone there. So I expect these 10-year bonds to head down to 3.6% as a start. So I reckon that's coming. That's all shaping up really nicely.
The rate angle is really interesting. I know the market's now moving to price in a lot more rate cuts this year than it was previously. So again, how that plays out for perhaps the REIT sector or the housing sector, and all those markets now shift on that.
Yeah,
so it will play out in
everyone's talking
ways.
about, is inflation going to go up because of the tariffs, which it probably will, but it's usually a one-off thing. So, but that still might stop the Fed from cutting rates rapidly if they're looking at inflation sort of picking up.
Interestingly enough, I saw Christopher Joy, of all people, said that he thought that because some of the Asian markets are blocked out of the US with the tariffs now, that they'll start dumping their goods everywhere else. So it could actually bring inflation down here, which was interesting.
Yeah, right. That's interesting. And also something like oil, I think I've been sort of
pointing out. You did warn about the $69, wasn't
it? Yeah. I've been looking at oil, and I'm not exposed to the sector, and really have been concerned that it could crack. And it had a nice run recently, but you can see here, this is going back years. This was a huge rally that we saw years ago, and then it sort of collapsed. And so this level around here, this $69 level, this has been multiple years of bouncing along here, which is actually the midpoint of that range.
That last little run there in the green, just after the black line of yours, is that April last year?
When's that?
I'm trying to remember the last rally in oil. I remember it threatened to go through 100 for a very brief period.
Yeah, that was it. No, that 2021.
Oh, so what sort of chart are we looking at here?
This is a monthly chart.
Monthly.
So that's back in 2022.
Show me 2023 there.
Okay,
I'm sure
that was the rally.
Yeah, that's the one I mean.
Yeah.
So that's again how things flip around. That was threatening to break through 100 at that point.
Yep.
And now
then all of a sudden,
exactly,
it's been very difficult to read it for quite a while. But I've known that. Tell you what, there's not much support below here, and it's actually in long-term downtrend. So you can see there, all in long-term downtrend. Whenever it goes to retest the moving averages, and this is what happens in these trends, goes to retest moving averages, the short squeezes get people bullish, and then turns back down again and starts to trend down. So right now, we've just seen it get hammered after rallying for the last month. It's really on the edge of this $69. I fully would not be surprised to see oil go like this. And this is why I'm sort of bearish also on markets, going, well, things are set up here for a pretty serious down move in oil, and that's going to lower inflation as well, like that sort of thing.
Well, I mean, I'm lucky enough to get a weekly report from the best guy in the business when it comes to oil, and he's been writing about the potential for a big downdraft in oil for quite a while. Again, I haven't got any oil exposure. But the interesting thing, again, with Trump is like he comes out with this, drill, baby, drill. You know, he's just killing the margins for the oil industry in the US. Like, I don't know what their cost of production is, but it's higher than the Saudis and whatever. And he's just going to wipe out all their profits.
Well, I think he wants to push oil prices down for the Saudis as well. That puts pressure on Russia. If you're hitting their oil revenues, that probably puts pressure on Putin to stop the war. So maybe there's all these geopolitical things going on in the background. But so just when I see lots of different charts all sort of pointing the same way, so we've had the US dollar, the stocks, monthly sell pivot last month, and we'll move on to the stocks now to get a sense. But we're just seeing across the board these sort of big technical levels coming up. And
I mean, commodities will get hit when growth gets into question, and obviously the short-term thing is against them.
Yeah, well, I mean,
it depends on the supply and demand dynamic at some point, but oil looking weak for sure.
Yeah, everything getting hammered, isn't it? So looking at the S&P 500, so you can see here again, there's the last wave, there's the last correction that we saw back in 2022. So we've had a really nice strong run. And you can see here, there's your first monthly sell pivot last month. And now we've got a continuation. It's broken through the 10-month moving average. It's heading back to that 20-month, which is your first line of support. But it's still in long-term uptrend, so it's still pretty early days. But now that this is all happening and it's breaking through these key technical levels, I mean, it brings the midpoint into play. So it brings the point of control of that rally into play, and also the top of the previous correction, before the previous correction, is around that level. So I wouldn't be surprised to see that S&P heading back towards that 4,800 level, and we're currently at 5,400. So that's another 600 points downside, which is 10%.
Well, next week I might get you to take a look at Nvidia, because it's very interesting this whole dynamic is driven by Trump and tariffs and what have you, but it as a business was a leading stock, but also making so much money. So again, it's selling down from a technical perspective, and the market's selling down, but it'll be interesting to see if the support comes into a stock like that, because it's not as if AI is going to go away and the demand for chips and all that type of thing. So there's going to be some interesting opportunities to look at from all this.
Yeah, absolutely. I mean, I'll just finish off on the ASX 200 just to show people what we've really been talking about for a long time, which is this 15-year channel and getting prepared for what could be just a massive buying opportunity down the track. And I've been preparing people for this, and we've got down below the MACD, which is our momentum indicator, giving us a sense on the monthly, and we're looking at this channel over 15 years, and we're saying, right, when things are weak, we have these sell-offs down to the bottom of the channel, and then you're waiting for the buy signal on that momentum to say, okay, it's probably time to start attacking this. And if you did that every time in the past, that was your moment to really attack. So we've just gone into a negative phase on that momentum. We're now at that point where things are heading down. So I'll just go quickly into that shorter term to give you a sense of what's going on, and we'll even get rid of that. So now this is the nitty-gritty of where we're at. I've been saying to you that this 7,600, which is the top of the range before the last correction, that's where all my calculations are coming from. There's the midpoint at 7,000 in the ASX 200. So this top the top of that range, 7,600, is what I've been saying. Could be massive support. So initially, like we could end up seeing a sell-off right now, hit that level next week, and then we could see a big bounce for a few months. And then it goes down and breaks below it. But the point is...
I'll also add in there that I already saw the headline this morning from Trump saying that, well, I might walk some of this back if you give me a great deal to get access to your markets.
Yeah,
so this
it's
is like
going to be wild and woolly. It's a fluid situation,
yeah.
Exactly. So my point is just technically that 7,600 level is massive, and it could provide great support initially, but if it does crack below there, it just gives me targets straight back to that midpoint, which is around 7,000. And then that brings into play the bottom of that channel. And that's where you're going to start seeing opportunities, I think, to really get long for the next few years. And I mean, you've been checking out a few stocks yourself.
Yes, and I've actually got a surprise down here for everybody. So I thought I'd mention two here. This is my last issue, actually, called the Hypergiant Hunter. I got very good feedback about this one. Now, this is about the gold industry. And the reason I bring that up is I always find what you would call divergence. When you have a situation where stocks are selling down for one reason, in this case, we say Trump and the geopolitical concerns, and the industry itself in question is doing very well and highly unlikely to be affected by tariffs. So gold is a perfect example of that, because gold is gold and it's going to boom. He's actually helping gold because he's making people so uncertain that they're going to gold and driving all the other countries to gold. So the opportunity in the gold space still remains very strong. You've made a killing in gold recently. So the Hypergiant Hunter there is an idea riffing off that. And so that's just some of the stuff we do. This is with the Australian Small Cap Investigator. Now, I released my latest report yesterday. So what a day to release your latest report, just when the market's getting absolutely creamed. But if there's one thing I learned from, and you can see how thick it is, there's a lot of information there, from COVID is you've got to get more interested at times like this, because when you know because what will happen now is everyone goes to cash, everyone gets fearful, the buyers hold off, and even I watched the open this morning, I feel it's less panicky than just the buyers are like, well, I'm not going to step in front of the freight train kind of thing situation. But if you know the stock, you can be aggressive with the appropriate risk qualifiers, George, wherever you are, a compliance officer, to say that there are stocks here that are selling down that are not related to the problem at hand, if you like. So in that report for example, is a medical device company that operates in the US, manufactures in the US, and sells in the US. The tariff situation does not relate to this stock.
It'll probably help them in the end. Yeah.
Well, it'll block out their competitors, in fact. But of course, when everything sells, everything goes. So if you know the stock, and this is why I do the homework on them, you can actually step in and go the other way. And then some of the other stocks, I was just thinking this morning that next week I'll go through the list and say, well, what really is the problem here? One of my recommendations is a property developer based in Perth. Now, Perth housing is booming, so they're going to be selling to that market. So there's all sorts of interesting ideas. Now, Belvedere is going to put the link. You can actually get access to the report if you're interested in the product very cheaply. The material there can be very profitable when it works, Muzz, and
that's true.
We've had a few good wins lately, so I was actually going to do a slide of the wins, and I would say too, and I've made this observation in Livewire and around the place, that the US valuation was very high before the start of this sell-off, so a correction down is not that crazy, really.
No, and we've been going up in a straight line for 10 years.
Rally, well, it's even longer if you look at it like that. But the Aussie small caps, blue chips, whatever, they're not at the same crazy valuation. Yeah. So I don't feel there's as much air to punch out of them in that sense. And I also feel that there's a lot of money on the side, professional money, that will step in and accumulate ones, which eventually what we saw in COVID, when the market goes, oh, geez, well, hang on, this has nothing to do with tariffs. We'll get long it. And as you say, some stocks will benefit from this.
Yep, absolutely. Let it get smashed down to the bottom of the channel and get long when it turns up again.
But to have the confidence to act, you do need to know, what you're going into. You can't just swing at things. Otherwise, you'll get shaken out because it is extremely volatile.
Yeah. No, it's tough out there, but it's always a bit of fun. That's why we do it.
So just to reiterate, for anyone that's following you through the closing bell, the line in the sand is broken through now. That particular level you had as the kind of
weak
spot.
About 100 points below us. So it's about 120 points further down.
Then the target is to 7,000 is the the sort
ultimate
of
major
support for the last 15 years.
Yeah.
So we could conceivably go down another 10% from here.
Absolutely.
Alrighty. Well, and as I said before the show, if that happens, no, what was the one that you said for the Nasdaq? If that happens, we'll be riding off into the distance because we'll all be out of a job.
Yeah, if it crashes, yeah.
Nobody will be interested anymore. And so I think we can leave it there, and we'll follow up next week. So what expectation-wise, just for the people following? It's volatile. It's down. We'll see what
major
happens.
technical break. Now you're just seeing how far the panic takes it before you get a short squeeze. You never know where that's going to be, but I'm now thinking that there's going to be further downside to come. So you've got to be wary.
All right. Well, I'll be watching as I ever do, but I'll be looking to see what I can do to take advantage of this, because history shows people go short term when the panic's on, but 12 months, 2 years down the track, you can get very good gains. Anyway, Belvedere is going to take us out with a horse today, because Murray and I are riding off to the sunset if none of these forecasts come true. No, I'm joking. But thank you for watching, and we'll see you next week.
See you later. You got to do a horse.
It's got to be that.